Hello everyone, my name is Rainer and welcome back. So sorry for the lack of updates last week because I was actually in Phuket, Thailand and I wasn't available to do the weekly market analysis. So I was at Phuket and just to share with you guys something that I saw down there. They had actually beautiful beaches, right? So you can see this picture I took. They have a really beautiful sunset, and sunset typically about around 6 o'clock, and the colors, the contours you can see at the beaches is actually pretty beautiful. And this is, if I'm not wrong, is someone doing a parasailing over here. And here we have actually pretty good food as well. If you like sandwiches and stuff, actually they have pretty good ones at the mall, and be sure to check it out, as well as lobster seafood for those of you who actually do enjoy crab, lobster, prawns and whatnot, because the way they fry it is actually pretty fresh. They will grab the lobsters from the market and actually stir fry it on the spot for you as well. So, and as well as snorkeling for those of you who enjoy snorkeling. Again, Phuket is a place to actually try out snorkeling. So that's a little bit of my personal life and what I actually been up to over the previous weekend. So this week, alright, back to trading. I would like to share with you two important things. Actually, the two important things that is essential to actually making big money in the markets. Alright, if you do not do these two things, alright, it is very difficult to actually make big returns in the market. So what are these two things that I'm going to share with you? So before I share with you what these two things are, right, I'd like to talk about, I will say, my trading journey on how I actually became a trader and how I actually chance upon these two ingredients that actually help you or help me make big returns in the market. So as you know, as I started out like most of you guys right now who are at home, right? Started out because I would like to, grow my wealth. I would like to do it, with the click of a mouse and the comfort of my home, and basically and trade the markets because it's actually there almost 24 hours a day. So that was the first lure to trading. Then after which I started learning trading through forums, the internet, and in my early days of trading, right, what most traders would actually say or tell me, say that, Rainer, before you put on a trade, always look for a minimum of a 1 to 2 risk reward, because you only need to be right 50% of the time and you would still come out ahead. So this I would say trading approach was actually ingrained in me in my early days of trading. So before I put on each trade, what I'll always do is actually look if there's actually a potential for a minimum of a 1 to 2 risk reward. So there are times whereby I get a slightly bigger risk reward, like a 1 to 4 risk reward, and I'll be so excited about it, so happy, like a little kid who got a distinction for his exams, feeling so proud and feeling like a champ just because I got a 1 to 4 risk reward from time to time. So I traded with this trading approach for a couple of years, and after 2 years I look back at my trading journal, my trading records, and I noticed one thing. And what was that? I noticed that I was losing money. That's right, I traded this approach with a fixed profit target in mind, and I was still losing money after 2 years. So I started reflecting and wonder why is this happening to me. So then I reflected and realized that the reason that I wasn't making money was because I wasn't letting my trades run enough, wasn't riding the trend. So then I went about searching for more information on how do I ride the trend. So I was back again in the internet, on forums, on books and whatnot, and studying how people ride the trend. And most trading gurus would tell you that to ride the trend, the best way to go about it is actually to scale out. That's right, scale out. So what is scaling out? So scaling out is basically, for example, I give you an example. If I were to buy Google at say $100 a share, I long at $100 a share, and when price approaches $105, I look to sell 50% of my position at $105, and I'll let the remaining 50% of my position ride the remaining of the trend. So that's what I mean by scaling out. So I adopted the scaling out approach and traded it for about a year. And after that, I look at my trading records and I reflect, and I noticed that, a consolation is that my bleeding stopped, right? I stopped losing money. However, the funny thing is that I wasn't really making big returns either. My returns were mediocre in terms of single-digit percentage returns. And I started reflecting further, and why is that? Why am I not making the big returns like, the big money managers who are actually, getting an average of over double-digit returns on average a year? So I started reflecting, and that's when I chanced upon trend following. So when I did chance upon trend following, I then started coming across these two ingredients, these two things that every trader must do to make big money in the market. And it is none other than holding on to your position and scaling in. Right? So what is scaling in? Scaling in means when price goes in your direction, you look to add on to your existing position that you already have. So that's what I mean by scaling in. And only by holding on and scaling into your positions are you able to make big returns in the market. So with that, let me give you an example of a dollar yen trade that I took a couple of weeks back. So this is the chart of the dollar yen, and as you know, I've actually been bullish on the dollar for, I would say, months now. If you actually check out my site down here, I mentioned that, before the FOMC, I did an analysis, a look before the FOMC, and at the end of it, summary was that among the majors, I would favor a short on the euro dollar and long the dollar yen, because I feel that it's relatively weaker compared to the rest. So I mean, dollar yen was actually one of my favorite to long because it's actually relatively stronger compared to the other majors. So with that, looking at this chart of the dollar yen, okay, so a little heads up for you. So the green arrow basically are my long entries. So I got long over here. So let me use this tool. So basically I got long here, reason because I noticed that price was forming into a range, right? So I wanted to actually trade this setup. So I had two things in my mind. I was actually having either going to long a pullback setup whereby I queue at the bids, alright, so I was queuing at the low of the range, or I was actually placing a buy stop over here in anticipation for a breakout towards the upside. So I placed those two orders in the market and I got triggered on here, right, whereby I long at the lowest of the range. So I got triggered, so I was long down here. So technically, when I was triggered, I should have removed the buy stop at the top of the range, but somehow I forgot to remove my buy stop and it was triggered over here as well. So I got triggered and I scaled in by accident into this trade. So looking forward, I had two positions on and price went in my way. If I'm not wrong, correct me if I'm wrong, I believe this move was due to FOMC, and this move here whereby I traded this breakout as well, was done by the BOJ. So again, the second time I scaled in was because price was consolidating and I traded the breakout as well. So that's how I got my third entry, trading the dollar yen. So moving forward, again, we see price trading higher. So as you can see over here, when price rallied higher, closed for the weekend and gapped up higher over here, then it started to retrace a little, alright? So technically speaking, I would have queued a buy stop at this high over here, I would have queued a buy stop. But the reason was that I was at Phuket, so I didn't have access to my trading terminal, so I missed the opportunity to place a buy stop over at this high over here. So I only had three trades on the dollar yen so far. So again, moving forward, we see price trading higher and followed by it doing a retracement. So another move higher, and price eventually seems to be coming into I would say respecting the 50 period moving average. And right now on last Friday, it seems to be some traders looking to take profit, and here is where I got my last scaling in over here. I scaled in once more. So reason being was because I felt that the 50 period moving average would be a decent support level. So I long somewhere, I think around here, alright, can't remember the exact price, but somewhere along this line over here. And right now I actually have about, I'll say, 4 positions on dollar yen. Positions on dollar yen. So I scaled in twice, and my stop right now for all positions is somewhere around the 103.50 level. So I'll do it highlight in red. So yep, this is where my stop is for all positions at the moment. And if you ask me, I believe that I'm actually up more than 1,500 pips as of now. So let me have a look at it. So yep, this is my trade log, and you can see that I'm actually, let me have a look. So over here, the dollar yen trades that I actually traded, all my stop losses at 113.50, and the different prices that I entered at 107, 108, 109, 114, and the number of pips that I'm actually up right now. So I would say about 1,700 pips at the moment on just the dollar yen trade. So if traders were actually looking in terms of R, I'm actually up about 30 R right now on dollar yen. And if a trader would typically risk a 2% on each trade, so you're looking at about a 60% return on the dollar yen itself. So I couldn't have done it without the two ingredients that I mentioned earlier. And the reason I'm able to do this is because, I repeat, because I hold on to my trades, and I scale in. So that is the only way that you're going to make big returns in the market. If you do not hold on to your trades and scale in, it's, I would say, pretty much impossible to make big returns in the market. So just a little recap for you guys. So this week, I know I talked to you guys about how I actually approach the markets, right? Initially, I had the fixed take profit target in mind, and it's, it didn't work out for me. Nope. Secondly, I tried scaling out of trades. Well, it stopped my bleeding, but again, didn't provide me with the kind of returns I was looking for. Again, no, didn't really work out for me. And what eventually did work out for me, the two things that matter so much to me, all right, I would say is as close as the holy grail, if you ask me, is actually holding on to my winners and scaling in to my trades. All right, only by holding on and scaling in are you able to make the big returns in the market. So frankly speaking, from a more, I would say, a more honest perspective, before I actually had such big return on dollar yen, I did incur small losses along the way, and because that's the price you have to pay as a trend follower, right? It's only by incurring the small losses would you be able to catch big moves in the market. That's a fact and the cost of doing business, and there's no way to escape from it. So if you're looking for something which have around 95%, 99% win ratio, I would say trend following is not for you, because trend followers typically win about 40% of the time. So about 40% of the time they win, 20% of break evens, and 40% of the time they will lose. So that's a fact, harsh cold reality of trend following, and it's something that you have to actually bear in mind, and there's no way of going around about it, right? That's the only way I know of capturing big moves in the market and making big returns in the market, which is to to size up the whole moves, holding on the trades, and scaling in. So with that, that's all I have for you guys this week. Not exactly a weekly market analysis that I usually do, but I thought it was pretty important that I share with you guys how I go about with my trading approach, and I hope you guys find it useful, right? So with that, I wish you guys good luck and good trading, and we'll talk soon.